The Rebel Capitalist Show.
What do you think about Bitcoin? I don't think we've ever had that conversation. And I was just at the Bitcoin conference down in Miami just prior to mine, and I can tell you my experience there. But what are your thoughts on Bitcoin?
I have some Bitcoin. It's not an enormous investment for me. I view it as a speculation. I've been covering crypto for many, many years. I actually am friends with Trace Meyer, and I've known him since before he ever bought his first Bitcoin. And he was buying thousands of them below $1. He was actually in the gold community, and he wrote he ran the website, excuse me, Run to Gold, and he wrote a book called The Great Credit Contraction, and that's how I met him and started interviewing him. So I think Bitcoin tries to do digitally what gold does. I mean, gold is manipulated though. There's so many games with paper price manipulation with gold and silver. When I buy metal, I don't buy it as an investment. I buy it for savings, portfolio insurance, and wealth preservation to protect my purchasing power in the future, because I'm seeing all this stupid behavior from not just the Fed and the US government, but all these governments and central banks. They're all doing very similar stupid behavior now.
But yeah, I see it the same way. I use gold as the insurance part of my portfolio, and I put Bitcoin in a speculative class. But with the price action, I mean, how do you just personally determine when you would buy or sell more Bitcoin? Because, it doesn't produce cash flow. It doesn't have a long history. It's tough to determine, how the market is it risk on, is it risk off? And for me, and I'd love to get your thoughts on this, I just try to measure the prevailing psychology in the marketplace. Do we have more panic right now, or do we have more hysteria? And if we have more panic, then I like to dip my toe in there and kind of maybe start to buy. But if we have hysteria, then I definitely don't want to buy. Maybe you don't sell, but you definitely don't want to buy. And I think the hysteria was obvious back, going from probably 30,000 up to 65,000 or 60,000. And now I don't know that we've seen that panic yet. I hope we do. I hope it goes down further to where we do. But how do you determine your entry points there?
It's a good question. I refer to the work of Sir John Templeton. So the career of Sir John Templeton, I think he's one of the greatest investors of all time. And he looks for the point of maximum pessimism. So he's looking at sentiment, he's looking at charts, he's looking at valuations, and you're looking for something that has crashed and that is bottoming out. So it's crashed and it's flatlining. So something like uranium stocks or gold stocks after they crashed in February and March of last year, or uranium was in a bear market for so long, or oil stocks got very, very cheap in February, March, and April, and part of May of last year. So those are the types of things you're looking for. You're looking for valuation. You're looking for businesses that can survive a bear market if it gets even worse, which is why an example like with the oil market, for a company like Chevron and for Shell, they had the least amount of debt of the larger oil and natural gas companies last year. So they were low-cost producers and had the least amount of debt of all the bigger ones. And had the oil price not rallied, the larger oil companies like ExxonMobil that had too much down on their debt, that had more debt on their balance sheet, those ones would have been in trouble. So when I was writing articles, extensive articles for my patrons, my paying customers about this is what I was talking about. So people with a higher risk tolerance then would have maybe speculated more on companies like ExxonMobil, betting that they wouldn't cut the dividend, that they would fire employees instead, that oil prices would rally. But they would have to understand that the company has a lot more debt than some of these other companies. So that's how you do it. You're looking for some assets that go cheap, but you, if you're buying businesses, shares in Bitcoin, you're looking for businesses that can actually survive a bear market and survive the turnaround, because you have to get to the turnaround. And then you also, if you buy small companies, they don't have access to capital. Do they have cash on the balance sheet? Is a larger company going to come in and buy them out? And you're not going to get a good buyout price. You're going to get bought out at pennies on the dollar. And that's not going to be necessarily that good either, unless you want shares of the larger company. And then maybe you're going to get good valuations on that for the buyout. It just really depends. But when you're doing global macro research, what I do is top down and then bottom up.
Yeah,
So
right.
I'm looking at the global macro picture, and then I'm looking bottom up for industries that have been through a bear market or in a bear market. And if they're still in a bear market and I think it's going to last a long time, I'm not going to necessarily buy anything. I'm going to wait and I'm going to watch.
Yeah, and that's where you lay over that
But
sentiment that you were
yes,
referring to
but
earlier.
but Bitcoin is a little different because, like you said, there is no cash flow. You don't have to look at debt on the balance sheet. So it's a little bit different than looking at, buying oil stocks during the bear market when oil was, going negative at one point and all the craziness that happened in the oil market that I was covering last year.
Yeah, I think it's all about just having a long-term view and then just trying to figure out the market sentiment as much as you can.